Okay, real life and real estate. Listen, few episodes ago, episode 38, I had an episode called You Know What Makes Me Sick, where I talked about structuring your business right. Well, guess what? There was a part 2 to that, and we missed it. We didn't post it, and so we're posting that for this week. When it says to reference back, when you're referencing back to that last episode, go to 38. But for now, watch or listen to this. Hi there, and welcome to Real Life and Real Estate. I'm Mark Peebles, here to help you live your best life and achieve ultimate success. I work with crazy people. I'm just going to be honest. Constantly in the background, they're always videoing, they're taking social media content, and my mind as an ADD person is like, but it's okay. Because today, I'm going to focus. I'm going to talk to you about basically part 2 of what we started last week. Last week, if you did not hear it, I talked about taxes. I talked about an LLC that you need to have in place, first of all, to protect yourself, and then how you need to have that structured as an S Corp as you get to the place where you're making about $100,000 a year, okay? I gave you all of that, those thoughts, not as a CPA, not as an attorney. You need to consult your own advisors on that, but I'm sharing what I did to be successful. And as a review, what I did is I structured as an S Corp back in 2016, and then I started what I'm going to be sharing with you today, which is Profit First by Mike Michalowicz, bringing it into the real estate realm. And end of 2016, I stroked my last check, $17,000 to the IRS, and I've never been in debt to the IRS again. And you know what? I want this for you. If you are out there and you're saying, I'm always behind on taxes, or I hate paying taxes, listen to last week. If you hate paying taxes, last week's episode makes it a lot easier and is going to save you money. This week's episode is, how do I ensure that I have the money there to pay my taxes? And in general, how do I enjoy what I make a little bit more? It seems like every time I have a closing, the money disappears and I never have any money, right? I never get to enjoy the fruit of my labor. Or the other problem is you're enjoying the fruit of your labor too much and you're not putting money in the right place. You know, I've always been a Dave Ramsey guy. In terms of Dave Ramsey, he says, tell your money where to go. And that's what basically Profit First does, is it's you on the business side of things telling your money where to go up front and basically taking a lot of stress out of your life, okay? So we've structured right. We've got our LLC. Forms have been filed to tax it as an S Corp. We're taking our payroll, but where is all the money going when I am getting paid from my brokerage? So I have a closing. Where does the money go? So Profit First by Mike Michalowicz. Again, you start Googling Profit First, Mike, and he'll come up. You'll find him. Highly recommend you read this book. But this is how I applied it to my real estate business. What Mike Michalowicz says is it's almost like Dave Ramsey, in terms of when you're on a Dave Ramsey total money makeover, budgeting every dollar, you have the envelope system. How does the envelope system work? Cash comes in or money comes into your account. You take cash and you put in all of the envelopes, your budget for the month in each envelope. So if you run out of money in your, dining out envelope, well, guess what? You are out of the budget for that month, okay? And so that is what we are doing on a large scale with Profit First, is we are telling our money where to go up front. So I have 6 accounts. Here are my 6 accounts. Number 1, I have an income account, all right? Then I have a giving account, or my tithing account, you could call it. Then I have my profit account. I have a tax account. I have my OPEX account, operating expenses, and the last account I have is my owner account. So let's use an example. I have a closing and I get paid $10,000 in a commission, okay? So Navex Realty, my brokerage, pays my S Corp or my LLC taxed as an S Corp that $10,000. The whole $10,000 is dropped right into my income account, okay? So right off the bat, all the money goes into one account. So when that money comes in, accounting should be very easy because you're not trying to find income in all of your different accounts. You're only finding income coming into one account, and that is your income account, right? Pretty simple. All right, so then what I do is I take 10% off the top, okay, before any taxes, anything. I take 10% of that, I put it into my giving account, my tithe account, okay? So right off the top, $1,000 goes into my giving account. Then I have my profit account. Mike Michalowicz is profit first. I believe in giving first. I believe that you should be giving, you should be tithing to your local church, organizations that are important to you in your community. You need to be giving and sowing into your community. So I do that first. I recommend you do too. I believe you'll be blessed because of that. Then what I do is I take another 10% and I drop it right into my profit account. Now, what's the profit account? The profit account is my fun money, right? That is the account where I get to enjoy the fruits of my labor. So what is that? Well, if my wife comes to me and she says, hey, we need a vacation. Let's go on vacation, which, if you follow me, I would tell you need to be scheduling your vacations early in the year. You don't wait until last minute. But if my wife comes to me and says, hey, can we get away this weekend? Yes, actually, we have $6,000 in the profit account. Let's go wherever you want to go. We'll buy plane tickets, right? That is fun money meant to be spent on fun things or things that would enrich our lives, right? Wife wants to buy new furniture or remodel the kitchen. Great. We've got $25,000 in our profit account. Let's do it, okay? And we don't have to feel guilty about it because it is profit. And we're choosing to designate that as our profit. You've got to have fun in this business. This business is way too hard not to enjoy the fruit of your labor. All right, my third account, the tax account. So how much am I setting aside in the tax account? 30 or 40%? Nope, I'm not. Here's what I'm setting aside in my tax account, 10%. Now, you need to run all of this by your CPA, okay? Because honestly, 10% works for me, but let me explain why I'm at 10%. If I make $100,000 this year, I'm paying myself payroll, and you would need to go back and listen to how I talked about this last week. I'm paying myself a reasonable wage, call it $50,000 a year, that is coming out of my owner account. Now, on that owner account, I am paying my payroll taxes, but then also my LLC is paying the other part of my taxes, the corporate side of the taxes, or if you're self-employed, what would be that self-employment tax, okay? So I am paying taxes on my salary throughout the year out of my owner account. So that is why on the remaining amount, I've got business expenses that are coming out. I have, profit that I'm putting in there. I'm giving out of that, right? And that's all tax deductible. But the actual the actual taxes, if I set aside 10%, I am saving money on whatever I'm taking in owner distributions. And when I'm saving that money or I'm saving those taxes, I don't need as much to be set aside. So I set aside 10%, and I have never run short since I started doing this almost 10 years ago in 2016. Again, you might set aside a little bit more in the beginning. Maybe you do 10 or 5% to your profit account, and you do 15% to your tax account just to be sure. Because here's what happens. If you get to the end of the year, all your write-offs come in, and we have a lot of potential write-offs as agents. So we get all of our write-offs in, our business expenses, mileage, or maybe you're paying for a vehicle out of there. There's all of these write-offs that happen. And if you have surplus in your tax account, guess what? That becomes profit. And now you've got more fun money, okay? So it's not bad to set aside a little bit more. I'm just telling you what I do, right? I'm not advising you. Talk to your CPA, and then you will be able to make a decision of how much you need to set aside. Okay, then I've got my OPEX account, right? So accounts so far, I've got my giving account. I have my profit account. I've got my tax account. The last account that we are setting aside in is the OPEX account, and that is strictly for my business expenses, okay? So if I am paying for a CRM, I'm paying for some lead generation, I'm paying for postcards, I'm paying for design, I'm paying for any of my business expenses, any subscriptions that I have. Like I have subscriptions to Inman. I have other business subscriptions like mykcm.com. No, none of these are sponsors of the show. They're just things that I really like and I get a lot of great information out of. But I pay for these subscriptions out of my OPEX account, operating expenses account, all right? The last thing then that I have is the owner account. That owner account, again, that's where all of my personal pay comes out of. So when I want to write myself a distribution check, I write it out of my owner account, okay? So if you have $10,000 in my owner account, I paid myself $5,000 this month in payroll, I might write myself another $2,000 or $3,000 out of my owner account towards my owner distributions, okay? So all of that to say, when you have money going to the right place, it really tells you how much money you have to spend. It helps, especially for simple-minded, ADD, dyslexic person like me, it really helps narrow down on how much money I have in my budget to work with to ensure that I am not overspending in one area. Again, used to be that same $10,000 would hit my account and I'd be like, yes, I've got money. And I'd go out and spend it all. But when tax time came around, I never had tax money there. What this ensures is that that tax money is available. And when you file your quarterly taxes, right, because you still do have to file quarterly taxes on any distributions you're taking, when you file it, money is there. And you can actually send off a payment to the IRS if you owe them money for that quarter. Okay, so you need to put these things into practice and realize that when you designate all of the money, you put it in the right place, now you're not overspending on something that you should not be overspending on. I'll tell you, structuring right, getting my S Corp set up, and then starting to use Profit First has revolutionized my life. I have not been in that burden of IRS debt for many, many years because I use this system. And the great thing about it is I often find that I don't need all of the tax money that I've set aside, and that just becomes more profit in the bank. It becomes another vacation. It becomes an opportunity to wipe out a debt. You might have a chunk of money sitting there, and you're like, oh, great. Well, I can wipe out a credit card or wipe out another debt. It allows you to take that money, and then you can roll that into buying a vehicle. You can roll it into kids' college. It's more money in your pocket if you don't need all of it. And you are, it allows you to have more profit to work with. Now, here's the one thing I will tell you. One little bit of advice that I will give you is when it comes to your profit or your tax money, okay, with your tax money, you might be tempted to spend that money throughout the year. So if you're anything like me, you see that number growing, you might have $20,000 sitting in that account, and it's hard not to think, I would really like to do this, right? Don't do it. Here's what I recommend. Get a secondary bank. When you transfer money into your tax account out of your income account, do an external transfer to your secondary bank, whether it is a credit union locally or another big bank locally, whatever it is, you need to be aware that if you transfer it out, you can just forget about it. Every time you pull up all of your business accounts, you don't even see that one, right? That's what you want. You want it to go somewhere where you don't see it. Mike Michalowicz would say you should send it somewhere where you need to have a, physical exam, where you need to have, let them draw blood in order for you to get the money out of that bank. Make it hard to get to so that it's there for what you need it for, and that's paying your taxes. Okay, so that's one little extra bit of advice. I think I have covered all of this, okay? This changed my life. I hope it has at least sparked something inside of you to make some changes in your finances, because I never want you to be where I was. And if you are where I was, just know this: you can get out of it, but you have to make changes in the way that you're doing things in order to get there. So that is real life in real estate. Real life is that this stuff happens, and sometimes we got to pay taxes, and sometimes we get behind on stuff, and that is real life. But I believe that if you put the business structure into practice, that you put profit first into practice, it'll have a great impact on your life, on your family, and really quality of all of it. And so that's my word for today. Thank you for being with me. I hope you have a great week. Bye.